Hello, welcome to the European Open briefing for Wednesday, November the 1st. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So we have relative calm amongst major pairs this morning. Ahead of a number of key risk events, we have the FOMC decision later in the day. We also have the Republicans who will be unveiling the tax bill. That's expected to come tomorrow, and also tomorrow it's going to be the Bank of England's policy meeting, plus that highly anticipated announcement by President Trump on who will be the next chair of the Federal Reserve. The notable mover this morning is the New Zealand dollar. It jumped higher after stronger than expected jobs data, while the pound is extending its gains ahead of tomorrow's Bank of England meeting, plus some developments on the Brexit talks, and oil is also doing well after OPEC said that there was strong compliance to their output deal in October. Let's first start with the US dollar. We can see dollar yen has been edging upwards after that low point yesterday. Dollar index hasn't been able to advance as much as dollar yen. Dollar yen has come close to the 114 level. We saw that weakness yesterday following, on Monday after that investigation to Russian collusion with Trump's campaign team led to the first charges being brought forward to three members of Trump's campaign team, or three former members. So that raised the political uncertainty in Washington. But we're seeing a continuation of strong US data. Yesterday, the Chicago PMI and the Conference Board's Consumer Confidence Index both sharply beat expectations. The Consumer Confidence Index surged to a 17-year high in October. Despite that, the Fed will be holding rates at the end of its two-day policy meeting later today, but they will likely signal a rate hike in December. We also have the tax bill that was due to be unveiled today, but following some strong disagreements within the Republican Party, that would likely come tomorrow. If we see a further delay, that could potentially mean trouble for the bill, as once again the Republicans appear to be struggling to reach consensus on some key issues. But the Fed decision today will unlikely see much of a reaction. The big announcement will be tomorrow's announcement by President Trump, who will say whether or not Janet Yellen terms will be renewed. That's unlikely. It looks like the current Fed Governor Jerome Powell will be the next Fed chair. The prior favorite was John Taylor, who was one of the more hawkish ones amongst the candidates. The reports that he's no longer the favorite, that led to some declines in U.S. Treasury yields, and that weighed on the dollar on Monday, on top of the those developments in Robert Mueller's investigation to Russian collusion with Trump's campaign team. Let's move on to the Aussie and the Kiwi. The Kiwi has been today's biggest gainer so far. It's up almost 1% against the US dollar, once again breaking above the 0.69 handle. Unemployment in New Zealand in the third quarter fell from 4.8 to 4.6%. Expectations were for 4.7%. That suggests that the New Zealand economy is doing well, despite some concerns that we might see some weakness down the line following the new coalition government led by Labour, who's already said that they want to ban foreigners from buying existing homes in New Zealand due to shortage of homes in New Zealand. That ban could come into force in early 2018. That could potentially impact the Kiwi, because that was a major source of foreign income for New Zealand. So some concerns on that front were one of the factors leading to New Zealand's sharp declines in recent weeks. The overall concern was the uncertainty general uncertainty about the new Labour government's economic policies. The kiwi has also, the Aussie has also benefited from the kiwi's gains. The Aussie is up this morning, up 0.3% against the US dollar, at around 0.7675 at the moment. Despite some more soft Chinese data, we already saw the official manufacturing PMI in China missing expectations early in the week. The private cash-in manufacturing PMI, that was in line with expectations. At 51 in October, but the production sub-index fell to 50.8. That's just above the 50 neutral level. And also we've got some more political headaches for the ruling Liberal Party in Australia. We already seen the resignation of one cabinet member where the Australian government lost its majority in Parliament as a result. There's another Liberal MP who may be forced to resign following reports that he may in fact hold dual citizenship through British descent. That hasn't been confirmed yet whether or not he does in fact hold dual citizenship. It's been looked into, so that doesn't seem to have worried the Aussies this morning much, as it's up on the day so far against the US dollar. Moving on to European currencies, the pound has been trending upwards throughout the week. It's currently at a 2-week high of 1.3307. It hit at 1.3310 a short while ago. It was boosted. It's the main lift this week has been the expectation that the Bank of England will raise rates when it meets tomorrow. But an additional boost came from reports that the EU chief negotiator Michel Barnier has indicated that he's ready to speed up the Brexit talks, which came to deadlock earlier, last month rather, and UK is keen to accelerate the talks so that by the end of the year they could move on to the trade phase, and that's helped the sterling ahead of Bank of England's decision tomorrow. The euro, though, you can see that it has managed to claw up from last week's lows when it fell after the ECB's decision to scale back its asset purchase, but keep that running for a further 9 months. Yesterday we had disappointing inflation numbers. Underlying inflation fell from 1.3 to 1.1%, and that pretty much reinforces the view that there's still some way to go till the ECB will be happy about the inflation outlook, and therefore it was right to maintain its accommodative stance for quite some time yet. But there was some support for the euro from better than expected GDP data. The Eurozone economy grew by 0.6% in the third quarter. That was above forecasts of 0.5%. We also had an upward revision to the second quarter from 0.6 to 0.7%. So the Eurozone economy is doing very well in terms of growth, but not so much in terms of inflation. So that's appears to be weighing on the euro at the moment, though it's managing to hold above the 1.16 level against the dollar. Finally, let's look at oil and the Canadian dollar. Oil prices are making fresh highs this morning after OPEC revealed that compliance to its output deal rose from 86 to 92% in October. Also yesterday we had the data from the American Petroleum Institute that showed US crude stocks fell last week. We're going to have the official government data later in the day. If that confirms the drop, then that could be a further boost to oil prices. We're seeing WTI hit a 10-month high of just above $55 a barrel, and Brent crude reached a fresh 2-year high of 61.53. That has boosted the loonie a little bit. We can see the loonie is off its lows. Yesterday we saw that big jump in USD CAD, in other words, a big drop for the loonie after Canadian GDP shrank by 0.1% in August. Expectations were that it would grow by 0.1%. So that data further dampens expectations of more rate hikes to come by the Bank of Canada in the near term. We saw the loonie being pushed back towards last week's 3.5 months lows of 1.2916. Finally, looking at today's economic calendar, we also had Japanese manufacturing PMI. The final reading was revised higher. We saw UK nationwide house prices, which the year-on-year rate beat expectations. We're going to have in the US the ADP National Employment Report. That should give some insight into Friday's NFP report. We're also going to have the ISM manufacturing PMI, and of course the Fed decision at 18 hours GMT. That's it from me. Thank you very much for watching and have a great day.